Hey guys, what's going on? It's Bryan, the Tax Cipher here, and I just had a client shoot me over a message, and they said, at the most basic level, what is bookkeeping? So I wanted to just take a minute and share that with you guys. So at the most basic level, what bookkeeping is we're basically just recording all your financial transactions into either like an Excel template or a QuickBooks Online file. So the reason why we do that is because we need to have that data either for the IRS to be able to prepare tax returns, or we have a third party such as a lender that needs to see the financial stability of our company, right? So typically where we start with bookkeeping is we start with a list of all your transactions. So if you go to your bank, you could log into which bank account, you could select a date range. So say from January 1st, 2025 to, we're in the middle of June now, June. And then I want you to show me a list of every transaction that's been hitting my bank account, money coming in, money going out. And so as bookkeepers and accountants, what we do is we take that data and we're really good at categorizing those transactions. So typically when that money comes in, we're recording that as income. And then typically when that money goes out, we have an expense. And then what we do is we net those two amounts, money coming in, money going out. And that's going to give us a bottom line number that's either a profit or it's a loss. And then on the flip side, we also have a balance sheet. We have assets, which show what we own, liabilities, what we owe, and then we net those two together and we have equity or a debt position. And so that's what bookkeeping is on the very basics. And so what we've done is for our clients, we're starting to take on clients now where we're going in on a consistent basis and we're categorizing all those transactions for our clients, which is called bookkeeping. I like to call it accounting because we're more than bookkeepers. We have education degrees in accounting. And so if you think about it, when you go to do a tax return, you can't just take in, let's just say an audit. So you have your taxes prepared. All you did was have that data written down on a napkin. Now you got to show that to an auditor. Not going to look very good. Same thing with a third party. So if I have a lender and I jot down a bunch of numbers on a napkin, take it to the lender and I want a loan, not going to work. So you have to take your bookkeeping very serious. Number one, for the IRS, for a third party, but then we also want to be able to take all that information that's hitting your bank account, every single transaction, and consistently record it because we can't remember what happened 3 months ago. Our brains just tend to forget, right? So if we consistently keep track of our money and we create those financial reports, we'll create profit and loss statements, we'll create balance sheets, we'll create statement of cash flows, we can monitor our accounts receivable, we can monitor our accounts payable with our clients, then they can make better business decisions for their business moving forward. On the flip side, what most business owners do is they just look and see what information, how much money or what information is my bank showing me as far as how much money I have in my bank account. Not the best way to operate your business. So we want to get to a level of being able to project that out, project out what our tax liability is, make sure we have super clean reports for the IRS, any third party that needs to come in and see our data. You know, what if you're to sell your business? Can't sell that business off of a napkin because the numbers aren't very accurate and they aren't verified. So hopefully this helps. If you want more information on our bookkeeping services, we're now opening up and we are taking clients going forward. So we will talk soon if you need help. Otherwise, have a great day. Thanks.